Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head to www.incomeinvestors.com. While you're there, you could also sign up for some free special reports that we offer to our readers, and they get delivered to your inbox. Omega Healthcare Investors, traded on New York Stock Exchange under symbol OHI, is a triple net equity real estate investment trust, or REIT for short, with a portfolio of senior care centers, skilled nursing, and assisted living facilities. The largest skilled nursing facilities, or SNF for short, focus REIT. Omega's $10.3 billion real estate portfolio includes 893 facilities in 42 states and in the United Kingdom. Its 66 operators are responsible for 88,322 beds. While Omega Healthcare is a great company, healthcare wasn't the best industry to be in during 2020 health crisis. The healthcare industry, and especially nursing homes and care facilities, took a hit in 2020, and Omega was no exception. John, can you elaborate a little bit on that?
Yeah, absolutely. Healthcare facilities and nursing homes across the U.S. experienced a surge in infections in the spring of 2020 and a greater surge in the fall. Healthcare facilities like Omega Healthcare implemented new and evolving protocols to deal with the crisis. Still, between February 2020 and January 2021, occupancy rates actually declined by around 13%. Now, in addition to lower occupancy, expenses increased by as much as $45 per patient day, or PPD for short, from January 2020 due to staffing and personal protective equipment expenses. Lower occupancy and higher costs resulted in operators not being able to meet their rent obligations. Now, lower revenue and earnings drove down the share price of healthcare REITs in 2020 through 2022. Again, a double whammy for companies like Omega Healthcare Investors. Many operators continue to struggle with the impact of the 2020 health crisis on both occupancy and staffing. Per patient day, expenses have eased since the dark days of 2020 and early 2021, but it's still above January 2020 levels due to higher staffing and related costs. On the plus side, occupancy rates have increased 8% roughly from the low in January 2021. Now, to that end, Omega has implemented restructuring plans with some of its operators. This helped it collect 94% of its contractual rent and mortgage from its operators during the most recent second quarter of 2023. And it also continues to work to resolve its outstanding issues with other operators, which we'll get to a little later.
Despite ongoing challenges, Omega's second quarter results topped guidance.
Yeah, for the second quarter ended June 30th, Omega Healthcare announced that revenue inched up 2.2% year over year to $250.1 million. Net income was $62 million or 25 cents per share compared to $92 million or 38 cents per share last year. Adjusted funds from operations for the quarter came in at $183 million or 74 cents per share. That's down slightly from $185 million or 76 per share for the same period in 2022. Now, funds available for distribution were $173 million or 70 cents per common share, and that's compared to $172 million or 71 per common share for the same period in 2022.
And John, in the second quarter earning release, management also discussed some recent developments, investment and acquisition. If you could dive a little bit into that as well.
Yeah, Omega restructured its agreements with a number of operators to help them through the pandemic. In the first quarter, it allowed La Vie to defer up to $19.1 million or 66% of its contractual rent from January 2023 through April 2023. In July 2023, La Vie paid $2.5 million in rent, and Omega expects to continue to pay $2.5 million per month until the additional restructuring activities are completed. During the fourth quarter of 2022, Omega agreed to allow Healthcare Homes Limited, which is a UK-based operator, to defer $8.2 million of contractual rent from January 2023 through April 2023, with regular payments to resume in May 2023. And Healthcare Homes has actually resumed full contractual rental payments as of May. And in the first quarter of 2023, Omega entered into a restructuring agreement with Agemo. Now, Agemo resumed making rent and interest payments during the second quarter of 2023. On the acquisition front, Omega acquired 4 skilled nursing facilities in West Virginia for around $115 million and leased them to an existing operator. The 4 nursing homes were added to the master lease of the operator, with an initial annual cash yield of 9.5% with 2.5% annual escalators. which is a good, way to combat inflation. In June, Omega entered into a $10 million mezzanine loan with an existing operator. The loan bears interest at a fixed rate of 11% per year and matures on June 30th, 2028.
Good things going at Omega, and that allowed it to provide shareholders with a reliable dividend.
Yeah, Omega Healthcare may not be at 100% with its contractual rent from its operators yet, but it's still generating solid adjusted funds from operation and FAD, or funds available for distribution. This allowed Omega to maintain its dividend payout at 67 cents per quarter, or $2.68 annually since 2020. While some dividend hogs may wish the company would raise its payout, it's important to remember that Omega didn't cut or suspend or hasn't done anything with its dividends since 2020. It's maintained it at 67 cents, and that's far more than you can say for a lot of companies, which in fact did cut or suspend their dividends. And with operations getting back to normal, there's every reason to believe that management will raise its distribution again in the foreseeable future.
And despite industry headwinds, Omega stock is crushing the broader market, and that's impressive.
Very impressive. Omega Healthcare isn't entirely out of the woods yet, but it's getting there. And that sentiment is being reflected in its share price, which, as you know, is a forward-looking indicator. On October 17th, Omega Healthcare stock hit a record intraday high of $34.77. Currently trading at $33.50 per share. OHI stock is up around 35% over the last 6 months, 30% year to date, and around 19.5% year over year. Big gains, but Omega Healthcare stock has plenty more room to run, with Wall Street analysts providing a 12-month share price target of $34 to 38 cents per share.
John, thank you so much for your analysis. Just to recap, Omega Healthcare Investors, Inc. is one of the largest healthcare REITs with a portfolio of 893 facilities. While Omega earnings took a hit in 2020 and 2021, it has mostly recovered, collecting 94% of its contractual rent and mortgage from its operators during the second quarter. It also continues to work to resolve its outstanding issues with its operator. This suggests that the operating backdrop continues to improve, with occupancy increasing and tight labor markets slowly moderating. At the same time, the acquisition pipeline continues to improve, with Omega closing $270 million of transactions in the quarter. Improving conditions helped Omega report better than expected second quarter results. Improving conditions helped Omega report better than expected second quarter results and continues to generate solid adjusted funds from operation and funds available for distribution, which helps juice its high yield dividend. Improving industry dynamics are helping propel Omega stock to record levels as well. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.